Sriram Finance board has approved fundraising from MUFG Bank through a preferential issue, marking the largest foreign investments in India's financial sector. It's been that kind of a year where we have seen that. By the way, we have with us Mr. Arun Duggal, who's the chairman, Sriram Value Services, Sriram Group of Companies, joining us on the phone line to give us a perspective. Mr. Duggal, it's great having you. How large is this, for you?
Thank you for inviting me. And I must make a correction. I am no longer chairman of Sriram Value Services. I am retired, but I used to be chairman of Sriram Transport Finance Company. So happy to answer any question you may have, but I'm not actively involved.
Okay, all right. So apologies for that. We'll correct that. Mr. Duggal, first off, give us a perspective. You have been part of Sriram Group. How large is this from a group standpoint? Because what this does is, one, of course, it's book value accretive for shareholders, so that's a massive positive. Two is that MUFG comes in, which is a huge vindication, right, for the group as a whole. And three, it gives you partnership with MUFG, which will likely drive growth further. I beg your pardon, it doesn't give you, but it gives the group a partnership with MUFG, which gives them the optionality to drive growth forward. Talk to us about what this means from a group standpoint for Sriram Group.
You're absolutely correct. This is a very important transaction for Sriram Group. Our founder, Mr. Tyagarajan, is a great believer in partnerships. We have a partnership with Sanlam Company of South Africa. They've been our partner for many, many years. And this transaction cements the partnership base by having Sumitomo come in as a very large partner. So I think it's going to serve the group extremely well. A financial services industry, as you know, is always requiring capital. And this injection of capital will position Sriram Finance for many, many years to come to continue to serve the small borrowers. We started by serving second-hand truck owners, and now it's expanded in many areas. So in summary, a very important transaction, a very important new partnership with the Japanese.
What does this do, Mr. Duggal, in your opinion, to ROEs? Is that at all something that would concern an investor from that standpoint? And how would the group look at this as well? Typically, of course, given that you've got a decent amount of experience with the group, how would the group look at the ROE dilution? Because it's a large amount of equity which is being diluted. The current equity base is around 60,000 crore. You've got another 40,000 crore of dilution coming in.
That's an important consideration in one way. But the most important consideration, as I mentioned earlier, is that we want to have, or the group wants to have, very large capital base so that it can continue to expand and grow without any capital constraints.
And how significant is the name and the brand which is coming along with MUFG, in your opinion? Does this mean that Sriram, one, of course, gets vindicated in terms of a group, but it also ensures that you will grow, or rather the group will grow faster, right? MUFG is a large group.
It is. And I'm personally very familiar with this group because I used to live in Tokyo for a few years. And I think it's a highly respected group worldwide and one of the best partners to have in Japan. So I think Sriram Group has done the right thing by partnering.
And Mr. Duggal, you've been part of this group for a while, and therefore you've been part of that larger financial services ecosystem in India. What's the sense like? Just this immense amount of interest in Indian financial services groups and companies, and some of them trading at a slightly discounted valuation to their peers. That's where the interest has been larger. What do you make of this interest, and what do you make of the regulator allowing for this interest to get well eaten into, if I can use that term?
I think financial services industry as a whole mirrors the basic economic situation of the country. Roughly, in my view, the financial services industry grows at twice the rate of economic growth of the country. And therefore, it needs additional capital continuously to sustain that growth. And of course, different financial services companies have different operating performance, and portfolios are very important. So investors take those factors into account in determining the multiples of different financial institutions. But in general, I think the financial services industry in India is poised for growth, and international investors are very happy to participate in that growth.
Mr. Duggal, give us your sense. This large group coming in, what does it do to the cost of funds? Does it meaningfully impact cost of funds for Sriram Group? Again, clarifying, I know you're no longer part of Sriram Group, but at the same time, does this mean that the cost of funds changes significantly? And if so, how much? 50 bips, 20 bips? What's your sense?
I'm actually guessing at the moment on this issue. I think it will impact cost of funds favorably, but I cannot comment on how much.
But sir, okay. But a credit rating upgrade warranted, likely?
Again, I would not comment on that.
Sure.
Till a couple of years ago, I was chairman of ICRA rating agencies.
Sure.
So rating agencies, do their thinking in their own way. But having this additional capital would certainly, be a strong credit.
Okay. Thank you so much, Mr. Duggal, for coming in and speaking with us. Certainly something which is a positive for Sriram Finance. Mind you, viewers, this now at the current market price, this trades at around 1.9 times book. And we have Mithali here who's computed that, by the way. Of course, gives us a perspective on what this deal is all about. Mithali, break it down for us.
Right, so zooming 57% year to date, Sriram Finance has again made it to the headline after MUFG has announced a 20% stake acquisition in the company. Now, this stake acquisition is going to be through a fresh preferential issue, and also it marks MUFG's largest ever investment in India, and also one of the largest FDI transactions that has been witnessed by the BFSI sector. Now, breaking down the deal, if you see, so MUFG Bank will be investing around 39,621 crores in the company at a price of 840.93 per share, with the transaction structured at 100% fresh issue and no offer for sale whatsoever. Now, post the equity infusion, if you see, MUFG will be holding 20% in Sriram, while the promoter stake will actually be declining to 20.3% from their existing 25% as of now. And as part of the deal, MUFG will nominate 2 directors at the Sriram Finance board and has been granted minority protection rights as well. Additionally, Sriram Finance has paid a one-time non-recurring, non-compete and non-solicit fee of around $200 million to the Sriram Ownership Trust. Quite noteworthy here. If you see the valuation impact after this transaction, so their price to book is currently trading at 1.9x, which was previously before this deal was around 2.5x, quite cheaper as compared to its peers. The asset quality also of the bank continues to improve, reflecting stronger underwriting and the collection efficiency as well. If you see throughout the year in 2025, large recent deals in the BFSI sectors have been, we have witnessed coming up with the Sriram Finance and MUFG deal was also followed by RBL Bank and Emirates NBD deal that was valued around 26,850 crores. Also the Yes Bank SBMC deal that was around 17,000 odd crores. Samman Capital and IDFC First Bank were also in the queue. So for Sriram Finance, it is a big news coming up, and back to you.
Okay, thank you so much for that, Mitali, for breaking that down for us. Kunal Bothra joining us, of course, and the shares of Sriram Finance have surged after the announcement of that deal. Kunal, how is it looking on charts? Good afternoon.
Good afternoon, Harsh. Looks very attractive. I think Sriram Finance has been the sole stock which has managed to just about carry the vehicle forward in terms of price trend. We've not seen the stock buckling under major selling pressure in the last 2-3 months, and specifically from a point when the stock was sub 600 to now 900 plus in just the last 3 months. So it's been a spectacular recovery for Sriram Finance in that sense over the last 3 odd months, and still looks like the stock is ready to go on the upside. Now, what we've seen on the charts on the short-term basis is the support for the stock after this recent bounce back of sorts establishes itself at 850, 855 mark for Shriram Finance. So now we could be looking at so if traders are looking at a buy, I think could be looking at a 850 broadly as a good support for the stock, and continue to we'll be bullish on the stock in the near term.
Kunal, also some of the other NBFCs, something like an M&M Finance, which was doing very well in trade yesterday. Wonder what that one's doing. Let's pull that one up as well in trade today. And what do you make of some of the other NBFCs, and what does this do likely to the whole sector? Any other picks within this basket?
See, in fact, I think what happened was a mixed reaction when Shriram Finance started to move up higher. If you look at the intraday chart specifically, for example, the moment Shriram Finance managed to pick up from 855, 865 levels thereabout, you saw Chola Finance actually going into a correction. But then the other names like L&T Finance went through a sort of an intraday pickup. AB Capital, you saw the stock picking up pace. So that was the only change which has happened, which means it's more like a mixed or some sort of a balance which is happening in terms of the sector specific front. I would believe that so what happens is when the leader continues to be dominant in terms of price performance from the sector, then the sector continues to be more of an attractive proposition for traders and investors, and especially given the market where we are, where there is, as it is, a very less number of sectors which are seeing a carry forward momentum or confidence from the investors and traders. So I think in that sense also it's going to be positive for the entire NBFC pocket.
Kunal, hi, afternoon. Just wanted to get a sense on what's happening with IT, and given the fact that you were one of the first ones to actually spot that IT is set for a rebound, and now one can see actually strength building in. Two stocks, KPIT and Tata Elxsi, breakout moves today.
Yeah, absolutely. So I think Tata Elxsi is something which I'll start off with, Aisha. So brilliant chart, I think, for Tata Elxsi, because at the start the stock opened up with I think a 2% gain, 2.5% for Tata Elxsi. But then the way the stock has managed to move from the initial part today, 7% plus 8% up kind of a take. So it tells you that there's been a renewed confidence which has happened throughout the trading day for Tata Elxsi. Looks very attractive now on the charts. The risk reward is positive. The best part is now those signs of divergences, etc. They are playing out true for names like Tata Elxsi, and this could be a beginning of a fresh trend. KPIT Tech also, I think, in similar lines. The stock was a slight underperformer in the recent past. Today's move brings the stock back again to those swing high levels. Excellent volume pickup, what we've seen predominantly for many of these names. So this is what it typically happens in stages. Initially, when a sector starts to become into a rally or a trending phase, you see few stocks being more leaders. Then once the sector opens up, you see the underperform. So there comes a phase when the underperforming stocks from the individual sectors, they start to make a comeback. I think the IT stocks are going through that phase.
They are, and quite a few candidates there. But Kunal, any stock strategies you may have for our viewers?
Yeah, a few of them. In fact, at current levels, I would look out for two buy calls. The first one is about Manappuram Finance. a very interesting chart. And we've discussed about gold, silver as an asset class overall. Manappuram Finance at current levels looks attractive for a near-term target of 300 thereabouts. 299 is where I would place the target for the stock. Stop loss at 285. And apparently from the auto pack, it's Tata Motors PV, which at 350-ish thereabout. That's also something which starts to look very attractive. So bullish on Tata Motors PV for a near-term target of 370, stop loss at 340.
Now, hold on to that thought. We're going to take a break, holding around that 26,000 mark, and it's a good 0.5% of an uptick that we're closing the week with. Analyze more stocks and get your trading ideas on the other side.
Welcome back, and let's pull up the stock price of HDFC Bank. That one in focus. There's been a large block with regard to HDFC Bank. 15.2 lakh shares changing hands, roughly 150 crore in terms of that block deal. But let's ask, in fact, Kunal very quickly with regard to whether he has a view on HDFC. You can see that bit of a spike on the stock price. Kunal, what's the take with regard to an HDFC Bank? It's languished for a very long period of time now in terms of the sideways move. Any breakout expected at all?
Yeah, it's been a consolidative stock. It's not moved at all over the last, I think, we can actually literally count the number of days also for HDFC Bank, how many days the stock has not been moving up. But I think in terms of a breakout for a trade, it's always better to wait for that confirmation for breakout before someone is looking to buy the stock, because of the fact that the stock may take a prolonged period of time to try and go into a band of consolidation. 1020 apparently is the breakout point for HDFC Bank. It has tested those levels multiple times in the past couple of months, but then the stock has unable to surpass and sustain above this 1020 mark. So I think at current levels, no major view as such for HDFC Bank, but if the 1020 level gets taken out, that's what I would believe that the stock should see a very good revival.
Right, okay. Let's welcome on board Dikshit Mittal as well and find out what he's making of the market right now. Dikshit, hi, afternoon. Great to have you on the show. Winding down on the year, you think the market will go further quiet as volumes begin to dry up?
Yeah, so market has been consolidating in a range for the last 15 to 18 months. And I think till the time any positive trigger comes in, whether in the form of earning growth acceleration or some kind of trade deal, or even if rupee also stabilizes, I think one of these three triggers, I think market is waiting up for. And we are hopeful that maybe by the start of next year, one of these three things should pan out and markets can be more optimistic going forward for the next 1 year.
In that optimism then, Dikshit, what do you think sectorally could do well? And I mean, for starters, does one need to make that dissection of large caps versus mid and small caps? Because mid and small caps haven't quite participated in the last lap of the Nifty rally.
Yeah, so basically, last year, there were supernormal returns in that pocket of the market, mid cap and small cap from the large caps by a wide margin. But now after this recent underperformance of last 1 year, long-term returns of small cap index is at par with the NSE 500. So I think most of the froth or you can say valuation concerns have been taken care of after this last 1.5 year kind of underperformance. And from here, I think market will be more stock specific, sector specific, and the companies which are delivering good numbers, which are having good outlook. So I think those kind of companies can start performing well, maybe from the start of the next year. And from here, I think one should be taking a stock specific or sector specific call rather than taking a blanket call on mid cap versus small cap or large caps. So valuation wise, I think we are more comfortable in that space, especially into the small cap. And from here, I think relative performance can start to turn around going into the next year.
But Dikshit, hi, this is Harsh here. That will mean that the small caps need to show some significant growth on the earnings front, because when you're looking at small cap valuations relative to their 5-year averages, they're still elevated, right?
Yeah. So one is to look the valuations in the context of expected earning growth. So as of now, what we are seeing is that mid cap and small cap as a basket has a better earning growth visibility as compared to the large caps. I think that is getting factored into the valuations also. And historically also we have seen that in a growth market like India, small caps typically trade at a premium to the large caps because of the growth. And also small cap index is a pretty wide index covering around 250 companies. So some of the companies may be loss making also, so that pulls up the reported P multiples of the index. So one has to keep stock specific scenarios in that mind. But overall, I don't think valuations are too much out of whack if you compare to the growth expectations in that segment.
And Dikshit, if I were to request you to maybe pinpoint a couple of sectors that really interest you at this point within that small cap basket, what would those be?
Yes. In terms of sectors, we are positive on NBFCs, looking at the way interest rates have gone down. So I think NBFCs, particularly who are asset financiers, I think they will benefit in terms of better margins as well as better growth outlook also as the interest rates go down. So NBFCs as a basket, we are positive. Secondly, incrementally in the last 2 quarters, we have turned positive on the consumer discretionary side because of the kind of efforts that the government and central banker is taking to revive the consumption in the country. I think that will somehow start reflecting into the earnings, hopefully from Q3 onwards. And finally, we are positive on the private capex side. So these are the three sectors which we believe can do well going into the next year.
Dikshit, curious to know what's the view on IT? What started off as a bottom-up story, do you think can have some earnings visibility too?
Yeah, so IT one is to be quite stock and you can say pocket specific because we don't expect broad-based growth to come back anytime soon into the IT space. But there are pockets, for example, engineering R&D companies or the companies who are more focused on the BFSI kind of space or manufacturing space. I think these 3-4 pockets within the IT space have relatively good earning visibility, and I think there I think one should focus on. But on a broad level, one has to wait because yesterday's Accenture results also indicated that on a broad level, I think visibility is still limited as of now going into next 1 to 2 quarters. But there are pockets, as I mentioned, R&D space, BFSI space. I think there one can make good money into the next year.
And Dikshit, I can't help but ask you, Sriram Finance in particular, it's a marquee deal, and I won't ask you for a view or an opinion on the stock in particular, but just talk to us. Foreign interest within NBFCs and Sriram in particular is extremely large at this point. Do you believe that there is a re-rating story even within the larger NBFC basket? Is that something that you believe could play out?
Yeah, most of the NBFCs are trading at, I think, good valuations, 2.5 times price to book. The good thing is, as the dilution happens at the higher price to book multiple, so book value goes up and your reported price to book comes down. So I think that makes the stock more lucrative from the valuations perspective, and also incremental money raise gives more ammunition for the growth also. So I think if the company is trading at good more 2.5 times book value and they raise money at that point in time, I think it helps the overall minority shareholder also and the company also.
In fact, when I was just doing the rough math, at around 2.1 lakh crore, which is the post-money market capitalization today of the company, and when you're looking at the price to book, it will be roughly 1.6 times FY27. So that way it's looking interesting because you've got 10,000 crore of profit after tax in FY26 and thereafter extrapolating for just a 15% EPS growth in FY27. Not EPS, I beg your pardon, profit growth. That will likely mean a 1.3 lakh crore size in terms of book value on a 2.1 lakh crore base. So around 1.6 times is what the price to book will fall to from just a month ago where it was trading at 2.1 times 1 year forward. It's now fallen to 1.6 as a result of all the dilution, plus on top of it, the dilution at a book accretive valuation, but on top of it, all the profitability that one would pencil in, which will likely come through. So maybe this is how it plays out.
And, I'm just wondering as to how does it stack up now in this, MUFG plus Sriram combined vis-a-vis its other peers as well?
Yeah, because your cost of funds
Yeah.
likely goes down as well, and that adds likely a couple of bips at least, or a few bips at least to the cost of funds advantage that Sriram has. The sector as a whole is doing fairly well for itself. You've got good growth in CV likely to come through, so you've got all of that to play out. Dikshit, how would you play the CV cycle? Are you bullish with regard to CVs, and how would you play it? Would you play it through some of the lenders?
So we have turned bullish on the CV cycle, especially next 2 quarters. I think this sector has good outlook, and we are playing this sector through OEMs as well, but more importantly through the lenders. So lenders into the NBFC space. I think we have good visibility at least for the next 2 quarters into this space.
Right. Okay, Dikshit, we'll leave it at that. Thank you so much for joining in today with your insight in the markets. Good to be speaking with you. Well, at the day's high is holding up almost about 0.6%, and we are now closing in on that 26K mark when it comes to the Nifty spot. We'll take a break on that note, but as we do that, hear it out from JSW Steel MD Sajjan Jindal saying that India is yet to explore its rare earth mineral wealth, and after the China shock, must commit to developing its own rare earth resources.
हमारे देश के अंदर we have a lot of rare earth. All the rare earths are available within the country, but because we as a country we have not really worked on it very diligently, so therefore we have not explored the rare earth mineral wealth that we have in our country. But now, after the shock that we got from China, I think the country is really sincerely working to see that we develop our own rare earth. Thank you.
So US excluding us out of an alliance on rare earths, what does it portend for India, sir?
No, India has to develop its own. Atmanirbhar Bharat is a very important aspect, and we have to work on that.
Well, welcome back, and we'll shift focus. India's net direct tax collections rose 8% so far in the current financial year, aided by steady growth in corporate tax receipts and lower refunds. Prakash here with all of the details of what that indicates. Prakash.
Well, the government has come out with the direct tax collection numbers up to December 17 in the current financial year, wherein net direct tax collections grew by 8% up to December 17. Whereas gross direct tax collections grew by 4.16% to rupees 20 lakh crore. A very significant development coming in. When it comes to refund numbers, there's significant decrease in overall refund numbers, which is down by 13.52% as of December 17. There's significant decline in refund numbers primarily on the back of improved compliance and system upgrade. And as a result of drop in refunds, net collections grew by 8% to rupees 17.04 lakh crore. Corporate tax collections have seen significant rise, reaching rupees 8.17 lakh crore, up from rupees 7.39 lakh crore in the financial year 2024-25. When it comes to advanced tax collection numbers, advanced tax collections grew by 4.27% up to December 17, wherein advanced corporate tax collections grew by 7.98%, whereas there is a decline in advanced non-corporate tax, which is down by 6.49%.
Right, Prakash, we'll leave it at that. That's the update coming in the direct tax collections. But let me also welcome on board Rajesh Palvia along with Kunal Bothra, who's already with us onto the show. Rajesh, hi, afternoon. Good to have you on the show. Once again, making that attempt, Rajesh, to get back to the 26,000 mark. What's your reading on the charts, and where do you think the Nifty can head next week? Some more consolidation, you think?
Good afternoon. So it's a multiple attempt to, regain about 26,000 level for Nifty, and Nifty is struggling to give close about 26,000 level since last couple of trading session. It's volatility is taking place in last couple of days, but looking at the broader market action in today's session is clearly giving us sign that, yes, possibly this time Nifty will succeed to give breakout over 26,000 level, as most of the large cap space and the beaten down stocks are also, showing sign of pullback. So in my sense, yes, as Nifty is now trading about 25,900 level, I think if it's trades above for next couple of days, I think yes, there is a possibility that, in this uptrend we could cross 26,000 level, and rally can extend further to 26 150, 26 200. That's the next level where we are projecting for the Nifty. For Bank Nifty is again, 59,000 is the make or break level for Bank Nifty. If we continue above 59,000 level, I think here also some recovery we could see in large cap banking space as well as in the PSU banking basket, and so we could get some support from here also, from the banking space also, and Bank Nifty can also scale to the level of 59 300 400 zone. So here also one can remain on the long side of trade with stop loss of 58,800.
Okay. Rajesh, what about IT and your top picks within that basket?
So IT again back in buying action and looking at the Nifty IT index. I think the way Nifty IT index has moved up and now negotiating with immediate supply zone of 36,700 800 zone. So if Nifty IT index able to surpass this zone, then we could see some recovery trade or some short covering action in most of the large cap IT stocks, and then possible extension of rally towards 39,200 we could see. So at this juncture, one can hold on as near-term charts are showing sign of strength. Nifty IT is moving in upsloping channel. So at this juncture, 38,400 is the important level to watch for. From large cap IT space, I think one can focus on Take Mahindra. That stock is looking attractive on the near term, short term structure, as the stock has already broken out its consolidation range. So we believe that, if Take Mahindra continues to hold above 1580 mark, I think upward trajectory would be there around 1640, 1650 for near term perspective.
Right, okay, that's the take coming in on some of those buzzing stocks, while of course Sriram continues to hold up and another 3.5% up in trade. Look at a Max Healthcare as well. After one acquisition that they made, that stock is higher by 3%. BEL has been going very strong, a 3% move coming in there as well. And then NBCC, Polycab, Idea, these are all names which are also looking good. In fact, Kunal wanted a sense on the charts of NBCC, because ever since the flurry of order wins began to come in, NBCC has been springing up in trade. But NBCC, NCC, L&T, where within the infra lot are you finding bets to buy in right now?
I think the stronger one, without a doubt, without an iota of a doubt, is L&T in the entire pack. That stock has done remarkably well and still managed to hold on to that 4,000 odd levels for L&T, say broadly over the last 1 or 2 months. Now, in terms of the emerging candidates, I would believe that yes, NBCC, NCC, they could be at a point where the risk reward is very attractive. In fact, for NCC particularly, I think if I'm not wrong, the stock is almost at a 15% divergence or 15% below its 200-day moving average. So that's how the near-term performance for NCC has been, where the stock has been beaten down significantly over the last, I think 6 months to 1 year approximately. So that stock now at a risk reward at an oversold juncture becomes a lot more lucrative at current levels. But then, if you ask me in terms of the positioning, L&T is one of the strongest names without an iota of a doubt.
It's L&T for the win at one. Let's just bring up the L&T stock for you. That, of course, is NCC, which is also holding up in trade today. L&T currently at 4,059.79. I stand corrected. But Jefferies has initiated coverage on Grow, and that's with a buy rating, with revenue growth expected to be at 29% CAGR over FY26 to 28. Rabinder, in fact, is here from our research desk with highlights from that note.
Well, as Grow isn't buzzing in today's trading session on the back of their bullish note from the Jefferies, where Jefferies has come out with a note on the grow, where they initiated coverage on the stock with buy rating and target price rupees 180. They say that the grow has emerged as the largest broker in India by active client, despite having started operation only in FY21, and company hold a 26% market share in active client, which is second largest player, has the 16% of market share. And Jefferies believe that the company has multiple growth drivers that can drive a 35% EPS CAGR between FY26 to 28, which is led by approximately 19% growth in core broking business, and driven by client vintage and market share gains, and 5 times growth in new initiative such as margin trading facility and wealth management, and approximately 700 basis point margin expansion. And on the financial front, they have highlighted that the revenue of the grow is expected to grow at a 29% CAGR between FY26 to 28, and which is supported by a strong product velocity and a client asset scaling up with the vintage. And on the new business front, they say that the new business are projected to contribute approximately 20% of the total revenue by FY28, while margins are expected likely to contract in FY26 due to lower brokerage revenue and wealth acquisition cost. And the company strategy is shifting away from riskier personal loan towards to secured loan against securities, which is known as LAS, which could lead to an improvement in the credit cost over the time. And Jefferies say that in the wealth management segment, that Jefferies value the wealth management business at 3,800 crore, assuming a 30% revenue CAGR and an improvement in the cost to income ratio to 67% by FY30. And the valuation also assume 10% penetration of the client assets. So back of this bullish note from the Jefferies, grow is in focus, and the stock is up approximately 9%.
Interesting. Okay. Can't really take a technical view on grow, but what about some of the other brokerages, Kunal? Positive on any of them? You've got an Angel One, you've got a Motilal, of course, not a core brokerage, but nonetheless, a very similar kind of business. And talk to us about what are this probably some of the other capital market players, if at all, neither of these.
I think it's been on and off, I would say, in the last couple of days for the entire segment, Harsh, because if you talk of the broking firms as such, then Angel One, JM Financial, these are the names which have shown some pockets of recovery of sorts in the last couple of days on the back of the news flow. But then the near-term trends for these stocks were a lot more negative, or in fact, they'll have to do a lot of hard work to try and come back to their midpoints of the recent corrective wave for many of the broking firms as such. The only stock over here which still looks very attractive in terms of price trends is without doubt it's BSE. Stock at 2,600, 650 plus mark. The last I've seen, I think that stock at current levels is still one of the stronger ones in the entire capital market frame. Most of the other names, even if you look at the likes of CDSL, CAMS, etc., these stocks have come back into a sideways range where they've been just about trading into a band, and right now they've come back to slightly above the lower end of the band for these names. So PSC is the only one which has trended very well over the last few months, but most of the other stocks in the capital market space as such have gone through a lot more sideways range.
BSC, that seems to be the preferred pick, but we'll take a break. Hear it out from GPT Infra. They won a 1,000-odd crore rupee order, and it's for a flyover project in Mumbai's Kurla Ghatkopar area, strengthening its urban portfolio. We spoke with Atul Tantia. He's the joint MD and CFO at GPT Infra on what this project really means for the company.
So give or take about 3.5 to 4 years is the time period for construction of this flyover. We are already doing a bridge in Ghatkopar for MRIDCL and 2 other bridges in the city of Mumbai. So this will take our order book in Mumbai to almost 1,000 crores. Our total order book would be about 4,300 crores, not 3,900. This is to be executed over 2.5 to 3 years. Most of our contracts are for 2.5 to 3 years. And this gives us strong visibility over the next 3 odd years to the management and to the investors as well.
Back with closing trades, and you're watching ET now. Before we move ahead with the show, just want to mark the uptick that we've seen in the broader end of the market right now and the Nifty. Nifty's recovered about 0.3% from the day's low, and we're now above that 25,950 mark. We've managed to hold on well to the gains that we've seen ever since we've opened for the day. But the real exuberance coming in today from the broader end of the market. The Nifty mid-cap is now at the highest point of the trading day, a 1% uptick coming in for the Nifty mid-cap, and similar moves coming in for the small-cap index. Remember, the small-cap index is one of the top losers when you compare it with the benchmarks and the broader market indexes since the year-on-a-year-to-date basis. So let's get a better sense of what lies ahead for the market as we draw down to the end of the year. We have Ashi Anand, founder and CEO at IME Capital, joining us on the show. Ashi, hi. Good afternoon and thanks for your time today. Give us a sense of the uptick that we've seen in the broader end of the market. After quite some time, we're seeing some cheer over here. How sustainable do you think this is?
Sure. So I kind of think, firstly, thank you for having me on the show. I think markets are likely to broadly be range bound in the near term. You're likely to see it kind of go up and down within a fairly tight band. And the core things that markets are kind of waiting for in order to get the next direction of the market or the next larger up move of the market, I think you need greater visibility of the growth recovery. You have seen improvements clearly in Q2 results, and there were kind of clear indications that Q3, Q4 onwards, you are going to start seeing improvements in demand across different sectors. Now, how well this plays through in the Q3 numbers, which is going to start another kind of 20, 30 days from now, that is going to be very, very key to understand kind of the future direction of the market. The other core thing that kind of the markets are really focusing on is going to be what's happening with the rupee and what's happening with the US-India trade deal, and the two of those are quite linked. But I think until you don't have some clarity around what's going on the external sector and what's going to happen with this particular trade deal, it is kind of causing some amount of a barrier to markets moving up. The core view that we have in terms of market movements in the near term is until you don't get some clarity on these two factors, both of which should hopefully come through in the next couple of months, you are broadly going to remain within a particular type brand. As these come in, you should hopefully enter the next phase of the market bull move.
Ashi, just wondering, hi, afternoon, firstly. Where the earnings pickup will come in, and a meaningful one at that. You know, while already in the earnings in the quarter gone by, one has seen a few upgrades coming in, but when do you think it'll be more broad-based?
Sure. So, Aisha, you know, that's broadly what everyone is really trying to kind of understand and evaluate, right? There are a few pockets that are seeming kind of interesting. Digital platforms, firstly, continue to be very, very robust in terms of earnings growth. I think that is something which should continue to kind of remain very robust. But in terms of kind of sectors that have been weak and we kind of expecting to start to see rebounds from the third quarter onwards, is one in a very large part of the market is really the whole lending space. You have had, especially for banks, a decent amount of NIM pressure, as well as asset quality issues. Both of these clearly seem to be close to be bottoming out, and you had fairly strong indications of that in the Q2 results. Now, how much this kind of improves as you go into Q3, Q4, it's not that the NIM pressure has completely gone away, but it is likely to start reducing, and the base effect is becoming more favorable. Asset quality clearly doesn't seem to be worsening. So I think that is kind of one segment where banks, and it's a very large part of the market which were under pressure, you are likely to see an improvement come through out there. The next big one is really consumers. And you've had a number of things which are all beneficial for consumption demand, starting from income tax cuts at the start of the year. You've had kind of GST cuts. After that, you've had a very significant decline in interest rates. You have had a fairly decent monsoon. Now, all of these factors are all contributing towards a consumption recovery. You also have likely to have a fifth pay plan kind of fairly soon in the coming year. Now, all of these are all fairly supportive of kind of a consumption recovery. On the ground, you're seeing this very clearly in auto, but not yet as strongly in certain other segments. So I think that's the other core segment that you're kind of most optimistic about. The third is really this whole capital formation theme, be it defense, be it capital goods, cement, real estate, etc. There was kind of momentum. That momentum is kind of priced into the stocks. Do you see an improvement in momentum in these spaces? I think these are the 2, 3 core areas that we're focusing on.
And Ashi, I remember last time you joined us in our studios over here, you were very positive on this entire platform company play, the internet companies. How are you seeing some of them shaping up right now? Swiggy now going to be a part of the FNO index from the end of this month. We've got back-to-back positive news coming in on Paytm payments as well. What is your take on some of the internet companies, BPC particularly, and where do you think they're headed from here?
So our view on internet and digital platforms is very, very clear. We believe this decade is going to be about this particular theme. The value migration that you're seeing from traditional platforms or traditional businesses towards new age digital platforms is a structural theme which is going to accelerate as we're going forward. Now, the important point is this isn't one segment, be it kind of fintech, be it insurtech, be it BPC. You have multiple segments of the industries or sub-industries. All of these, the fastest growing companies in each of these industries are all these new age digital platforms. We see these companies, a lot of these companies have already achieved significant levels of scale. Misho in kind of less than 5 years, right, has kind of become the second largest e-commerce platform in terms of volumes. So you've seen the way Grow has kind of grown. You've seen Zomato, Swiggy, etc. These companies are growing incredibly rapidly. They're already very large in terms of their respective market shares, and the relative extent of growth outperformance to traditional businesses is only going to continue kind of going forward. So we're seeing these companies become extremely kind of large companies over the next 5 to 7 years. Profitability trends are also quite kind of encouraging, and our longer term models show that these companies can be extremely profitable over the longer term. It's a really great kind of a combination for kind of value creation. Now, our view on the space is that it's a very clear longer term view. In the short term, and we never really good at predicting what markets are going to do in the short term. But in the short term, we are aware of certain kind of growth challenges in some of these companies. So if you're looking at kind of Eternal and Swiggy, there are concerns about increased competitive intensity in quick commerce in the near term with Policy Bazaar, their new insurance regulations, which are kind of coming in. So there are a few kind of near-term headwinds, but this really doesn't distract away from the theme that if you are looking at where value is going to be created in India over the coming decade, we clearly believe this is a space you're going to see it.
Okay, just looking at some of the losers as well, important to mark that. While the breadth of the market, of course, is quite supportive, you've got a Blue Star, you've got a Chola Finance, Voltas, HDFC AMC and Novama, which are the ones which are in the red in today's trading session. But Rajesh, before we let you go, any weakness in the market or any segment or sector that you can pinpoint specifically?
No, as such, if you look at today's action, I think most of the sectors are still in the up move. But a sector like power sector is still under pressure, and whatever pullbacks which we are witnessing in most of the power stocks are still facing the major challenges to cross their supply zone. So I think this sector we may see further continue on the weaker side. And sell on rise would be the strategy for a stock like Tata Power until this stock not crosses above 390 zone. I think trend is likely to remain on the bearish side. Again, the same behavior for NTPC also. It's continuously facing the challenge at around 325 supply zone. So this sector can continue further weakness in the near term perspective. And another sector where we feel that cement is another space where supply pressure is there. Stock like ACC, Ultratech, all these stocks are under pressure, and I think minor pullback should be used as a short opportunity in this sector.
Rajesh, appreciate that view, and thank you so much for joining us today. Good chatting with you. On that note, viewers, we'll slip into a very short break. Be right back and chat more about the market, the last lap of the market for the week on the
in association with Bank of Baroda.
For the sugar industry as the representatives seek revision of the MSP. ISMA has also raised concerns over excess domestic sugar availability this season, and my colleague Samir is here with all details about this. Samir.
The government may soon come up with a certain step which may provide much needed relief to the sugar industry. Now, the sugar industry has been constantly demanding from the government that they need to revise the sugar MSP to the extent of rupees 41 per kg. Sugar body ISMA has mentioned that the opening stock for the sugar season was roughly around 50 lakh ton. The domestic consumption will be of roughly around 285 lakh ton. The export has already been permitted for 15 lakh ton, as well as the ethanol diversion, which stands at around 34 lakh ton. After calculating all this, there will be sufficient sugar available that may be to the tune of above 60 lakh ton, and there is going to be an excess availability of sugar, which will provide sort of a discomfort to the sugar industry, because cane area might be a big challenge for the industry. So based on the excess sugar availability, there has been a huge cry from the industry to the government that this is high time that the sugar MSP needs to be revised. Interesting point is that now government, specifically Food Secretary, has already indicated that yes, government is actively looking into this aspect of excess sugar availability, and also they are looking on the MSP part as well. And there has been a strong indication from the government side that the MSP can be revised, and some decision in the same direction might be taken up by this month and or maybe early January, which is next year.
Right. Okay, Samir, we'll leave it at that. That's the word coming in from the Food Secretary himself. But food reminds me, Ashi, of food aggregators and the QCOM space. The underperformance of late in Eternal, and the fact that it seems that, Swiggy is kind of taking over. I mean, this intense competition in any case is par for the course. Though some of the brokerages believe that when Zepto does IPO, it's not going to be a big threat to Zomato, or for that matter, even Swiggy.
Sure. So actually, we're not too concerned about the near-term underperformance on an Eternal. This is something that we were actually expecting. What you did see is, I think in Q1, the markets got a bit carried away in terms of early kind of beliefs that losses on quick commerce may be bottoming out. We clearly kind of believe that quick commerce is such an attractive opportunity longer term, that competitive pressures are likely to only increase in the near term. At this stage of kind of evolution of a digital platform or a particular new segment, it is more important for companies to invest aggressively to defend their market share and defend their longer term competitive positioning than try to focus on profitability too much in the near term. But what you have kind of seen in terms of price movements in the on Swiggy, Zomato over the last kind of 6 months, you saw a very strong bounce after kind of Q1 on the back of kind of markets possibly believing quick commerce losses may have bottomed out. And then in Q2, as kind of companies started indicating that yes, competition is heating up and the incremental investments may be required, you've seen some kind of a pullback. This, according to us, is really too much of a market focus on what's happening in the near term. These companies are not this quarter or this year bets. These are bets in terms of what these companies are going to develop over the next 5 to 7 years. And really, from that perspective, increase investments to defend your market share and build out a position is actually really quite important. In terms of the kind of relative positioning of these different companies, I think Eternal very clearly has been the kind of leader as compared to Swiggy in terms of execution, both in terms of growth and profitability. And that did kind of lead to quite a healthy premium that Eternal trades at over Swiggy. What you are kind of seeing in the near term is a certain amount of valuation kind of bounce back, where the relative discount between the two is normalizing. But I think Swiggy still has a fairly large way to grow in terms of being able to narrow this kind of gap that there is between the kind of execution, and how much they're going to be able to narrow that gap will really kind of impact how the relative price performance of these companies are going to be over the kind of medium term. Lastly, kind of asked about Zepto. Zepto would really be quite interesting, because if you are looking at both Eternal or Swiggy, I think the food delivery business, while still growing at very healthy rates and still extremely valuable over the longer term, the big delta growth is really coming from quick commerce, and Zepto is really a pure play on that particular space. Most people in the market, kind of including us, believe that quick commerce is going to be dominated by these three players over the longer term. And really, I think all three are really quite interesting.
Interesting take coming in on the entire food delivery and quick commerce space. On that note, we'll slip into a break. But as we do that, here are the word coming in from the management at Shree Cement, wherein they're saying that they will raise capacity from 68 million tons to 80 million tons over the next 3 years, funding expansion largely through internal cash. As we slip into a very short break, listen into what the management had to say.
Yes, our company capital is around 36 crore, and that is there for very long time. We are not raising any loan or any equity, and we will be working. The 68 million ton has been created on an equity base of 36 crore. It has taken us about 25 years, but continuously redeploying the same earnings gainfully in the creating new capacity. This is what we have done.
The cement industry has seen one of the largest wave of consolidation and M&A happening in the last few years. How is Shree Cement positioning itself to consolidate your position? Are you looking to buy smaller cement players in the country?
The point is, in India, continuously capacity increase is needed. If I buy, new capacity will not be created. We are creating the new capacity with a very clear focus that newer technologies will come, cost of production will be lower, total layout will be much better. So we are concentrating mostly only on creating organic capacity, new capacity. We are not looking much for expansion from inorganic sources.
So you're not looking at acquisitions?
Not really, till something comes, but then there are enough suitors. And I don't think anybody will come cheaper. About 150% is the cost of new acquisition. It has its advantage, but the cost is high. We were planning little early and completing. So our growth rate, whether we buy or not, is not important. What is our growth rate of capacity expansion or growth? So that is better than the industry average.
Back with closing trades right here on ET now, and we're holding out okay. In fact, closing the week quite okay, one should say, although the better part this week hasn't been quite the same. But that said, we're finishing off at that 26,000 mark. or at least closing in on that when it comes to the Nifty spot for sure. The futures, of course, has made it to that level already. IT once again, and the strength in IT now seems to be broadening out. You've got a KPIT holding up very smartly today. Tata Elxsi holding up almost about 8%. A Polycab is higher by 5%. Idea is perked up almost 6% as we speak. 12 rupees is already where the stock is. And then, of course, NBCC also, which is going very strong. Sriram, well, after that MUFG deal, it's an unidirectional move. You're seeing an uptick of about 4% on Sriram, BEL, Max Healthcare, Tata Motors, passenger vehicles. There are all names which are holding out very, very smartly as we speak right now. But Ashi, just wanted to get your sense in on where is it that you're seeing, all that the government has done with regards to consumption actually translate into real economy and earnings growth. Because it seems like for now, it's very concentrated in autos.
Yes, right. So I think that's going to be really quite interesting to see. It is important to understand that with the GST rationalization, some of the near-term pressure that you are seeing in consumption is just driven by the fact that the supply chain needs to kind of pass through the old kind of GST goods and the new GST kind of the new products at the newer pricing needs to kind of come in. And that there will be 1 or 2 quarters of pain related to this GST related disruption because of a shift towards a new regime. We believe that kind of Q3 may still have some lingering impact of this. You start to see some green shoots in other segments, or at least we're hoping. In consumer companies, as you go into Q3, I think the festive season was really quite strong. But after the festive season, at least on ground kind of channel checks seem to indicate that consumption demand hasn't yet come back strongly enough. It's really Q4, and I think the next year is when this kind of overall recovery across kind of other segments of consumption, right? Ex-auto, be it kind of consumer staples or more importantly, kind of consumer discretionary demand. You are likely going to see this towards the end of the year, and I think next year is where you should see this kind of coming back, firing quite strongly. So kind of the hope is that as you go into kind of as you go into FY27, not only do you have the whole banking sector with quite strong earnings growth outlooks, consumption hopefully coming back, and if you do kind of have capital formation trends out there also turn positive, that's really when kind of the overall market earnings growth trajectory into FY27 could look quite interesting.
Kunal, what's your sense? Metals and derivative plays of precious metals holding out, or precious metals in itself? What's the big call for 2026?
Have any kind of view out there? You have seen...
Kunal, that question was for you.
Yeah, sorry, Aisha, I missed the name. In terms of precious metals or metal stocks, I would believe actually metal is something which could be a multi-quarter rally even from current levels. Now, the move which we're seeing from many of the counters over here are very, very interesting. You look at, for example, Hindustan Copper, Nalco, Hindustan Zinc, Vedanta. These are the fresh names which have given very strong and solid breakouts. Of course, there's been news flow which is attached towards certain stocks, but I think in that sense also the trend has been very positive. The likes of Hindalco, for example, that's another name which is looking extremely strong. The stock almost a month back was almost at 770, 775 kind of a mark. And the way the stock has recovered, managed to absorb a major downward gap, I think indicates the sign of strength for Hindalco. So not many positives which are emerging from the overall metal sector. The only case in point over here, if I have to look at the predominant large cap names, is underperformance coming into the likes of JSW Steel, SAIL, and maybe some sort of an underperformance or a sideways range for the likes of Tata Steel. That's the only change which has happened across the middle counters. But then, like what we had for other sectors also, there was a point where, other sectors, the mid cap, the tier 2 large cap names, they managed to first lead the charge and then followed by large cap resurrections as such. I would believe that there could be a similar speed for the middle counters going forward. So bullish on the entire metal counters, and even for the precious metals, we've been discussing this over the last few months also.
Kunal, thanks for that. Ashi, on that note, we'll let you go. Thanks for your time. Just starting to wind down for the day. Only about half a minute left for the market to close. Nifty managing to hold on to all of those gains we've seen at the open, and in fact, building on to that. Yes, we're slightly off the highest point of the day, but no complaints on the way the market has panned out today and for the course of the week. Because all's well that ends well. That's the case with the market today. A Sensex 0.5% uptick coming in. Nifty bank slight underperformance compared to the benchmarks, but nothing too sad. 0.2% uptick coming over there. Sriram Finance, the big newsmaker today, 4% higher, as was the case with Max Health. Tata Motors PV up 2.5%. BEL Power Grid, they've all done well. The IT index mixed moves coming in over there, but realty, auto, energy, pharma, FMCG, PSU banks, IT banks, everything has done well today. IT has been the least sectoral gainer, but nonetheless, 0.2% uptick over there. Nifty metal ending at the flat line right now. That is the way the markets have panned out. Some outperformers today. Grow was up about 11 or 12% on the back of a Jeffries initiation coming in. So good move on that one, as was the case with ITI Limited, BLS International, all of these outperformers. Like an Aeroflex Industries has done well. But Kunal, your thoughts on the way the market has wrapped up? We're very close to the 26,000 mark. Can we touch that on Monday?
Yeah, I think breaking 26,000 could be a matter of time. But the biggest talking point I would believe this week, Snehi, is the India VIX. First time we've had 3 consecutive days where the India VIX has closed below 10 levels. Of course, we are almost at the lowest levels in terms of the India VIX on closing basis, also at 9.5. That I believe could probably be the tricky point for the markets, because historical indications for India VIX falling below 10 has not panned out very positive for the markets in the near term. So that is the only data point which I believe could probably be something which I think one has to keep an eye on, because a persistent fall in the India VIX is bound to have some sort of an effect on the markets, where you might see the markets into a complacent zone, and then maybe the markets could get into a bit of a corrective wave. But so that's the major factor which I believe one has to keep an eye on.
Right. Okay, Kunal, we'll leave it at that. Thanks as always for your time. In fact, on that note, we're going to wind it up right here on this edition of Closing Trades. It's a goodbye then from Snehi and me.